Let's transition to this because I know we have to end it soon. There was a Bloomberg article or Washington Post article that came out showing this chart, which was every Palantir SPAC that they've invested in is almost bankrupt or down 80% on average this year. Palantir has sold out a lot of these positions. Some of them they still have. It's why they've been missing their EPS for consecutive quarters. Thoughts on a SPAC strategy? Was it a failed strategy, or is there still some life to this thesis?
Yeah, clear as day.
I think it is.
Numbers, yeah.
I think it is fair to say it was definitely not a successful strategy. There were lessons to be learned. They got exposure to different industries. Can they incorporate that exposure moving forward? SPAC strategy in terms of making money from investment. You remember when the SPAC thing happened, we said they can make money by the equity and they can make money by revenue.
Yeah.
On equity, I mean, the results are in front of us. They have lost a lot. Probably some of these things may bounce back over the time. So equity wise, it's a definite loss. In terms of revenue wise, maybe some of the revenues that will come eventually, it will be break even. So in terms of overall money point of view, looking forward at this point, it looks at best a break-even kind of investment. Now, the most important part is that they have get access to these industries and they have got access to quite frontier use cases. How they use it to build more clients. I think that's something I hope they have learned their lesson. Still, like going back, looking in terms of strategic investments and everything, I think they tried something different. I appreciate them for this. It didn't work out that way, as I mean, with the market the way things have gone. Let's see how these things look in 2 years down the line.
Yeah, I think a lot of these could rebound as well, right? Wejo is a phenomenal company. Tritium Charging got a lot of money from the United States to expand. Lilium is great. Some of the others I'm not that bullish on. Black Sky is another one of them. Babylon Health, but I mean, let's let the macro get better. Let's let interest rates come down to 2%, inflation come down to 2% over the next 4 or 5 years. And if one of them hits, they invested $220 million. If one of them hits, they could theoretically make that back and more.
So I have a bit of a different take than Sachin on that. Can you just bring up that chart really quick one more time? I'm sorry.
Yeah, no problem.
So while the equity position is down, this is still a company with over $2 billion in cash on the books and $0 in debt. So, okay, it was an investment risk that did not go right. Maybe I don't agree with the amount of SPACs they invested in, but there are some SPACs on this list that really could have huge future potential. And the ones that I'm thinking of are Sacros Robotics, Wejo, Lilium, and Black Sky. I mean, Black Sky was very important, I think, because of what Palantir does on the defense side. So that was a no-brainer. Wejo has huge potential down the road. It's still very early for that company. But when you think about Sacros Robotics, you can turn the chart off. I just wanted to get those names. When you think about Sacros Robotics, and you think about the amount of warehouses there are in the U.S. and the amount of preventive measures it can have from injuries, and the amount of less workman's comp claims companies can have, that is really big. And then from an efficiency level, if those exoskeleton robots really become a standard down the road in these warehouses, being on the ground level of that platform could be huge. And then Lilium, short range electric small planes, if that becomes a real thing, that could be a big market. Now, were the numbers fluff that were in the Lilium press release that I liked? We don't know yet. Maybe they were, maybe they weren't. But that's another area that could be very big because of the application for it. So I don't think we can say it's a failed experiment yet. The equity is certainly down tremendously, but it was worth the investment to get on the ground floor of some of these sectors that could be the next sectors in the 2030s. We got to wait and see. It's a long-term strategy that has not played out yet. The question is, why do they do so many of them? That's what I have a problem with. It's not that they did it. I think they overdid it.
Well, they were buying some revenue. I mean, that's the answer, right?
No, I agree. I agree with Steven entirely on this part. I think the strategy, like I said, I mean, they tried something new, and some of these things may bounce back. They got decent revenue, but some of the SPAC investments were they were questionable. I mean, at least they were not like. I mean, we saw what happened with with Faraday Future. I think that was one company when I was surprised why they are doing it. But yeah, I think the quality of some of the SPACs is pretty solid, but there are some questionable SPACs, which happens. I mean, the way they wanted to do it in a limited time, or I don't know what happened, but yeah,
It was like a
overall
VC arm,
number,
right? It threw
yeah.
at a lot
But
of
see,
companies, and
yeah, but if you see, it was not only VCR, there was a bit strategic into that, so they wanted to test different industries and use cases. But at the end of the day, the objective was to make money, and some of these will be sunk for sure. Some of these will be reasonable, and I think few of them will turn into gold mine with time.
I think they put themselves in a box because what they did was they set themselves up for a high growth target. And so when the numbers weren't coming in that they needed to kind of justify that growth, they were like, well, we're going to have to pump that growth from somewhere. So they're like, oh, well, these SPAC companies, they'll last at least 5 years. They've got cash on the balance sheet. It'll be fine. You know, let them pay us. And this way we can maintain that revenue target until the business improves. But it turns out that wasn't the case. So. No, but that's my take.
There
on
is
it.
one thing which is often overlooked in their SPAC investment. So if you see the Foundry for Builders and if you see the SPAC investment, there is a very strong contrast. Foundry for Builders are the small companies which are solving problems with new ways in old industries. They have not given any SPAC in those kinds. All of these companies are small in nature, so that's what all into Foundry for Builders, and this is where they also take some sort of equity positioning at times. When you see SPAC companies were all these companies which were like new kind of industries, new kind of problems. So there was like a very focused strategic sense also that what they want to do with it. So in their view, they know that these are the industries which are going into the futures. Let's make some bet on it. So it was new industries, new problems. That was the idea for SPAC they had. So it was not just like investing everywhere. It was like new industries and new problems. So yeah, I think that was the focus. Foundry for Builders was very different approach than what happened in terms of a SPAC. So yeah, I mean overall we can see the situation 2-3 years 4 years down the line. For sure some of these investment at this point are looking that they will be sunk costs, but overall whether it will be failure or not, it's better to judge when the market bounce back.